Hello, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. Today we got a special edition of On Trend. We're going to go over the breadth indicators in detail. We're going to define the base breadth indicators 80%, 80 volume percent, and high-low percent. Then we're going to show you how to create oscillators and AD lines. We'll show you how to chart multiple breadth indicators on one chart so you can get a weight of the evidence approach to broad market analysis. And throughout this, we're going to give you lots of tips and tricks as far as sharp charts and creating charts are concerned. And finally, we'll show you where you can find symbols for all of these great indicators. Defining the base indicators, 80%, 80 volume percent, and high-low percent. The basic calculation for these 3% indicators that I'm going to show you is the same. You take the positive indicator, which in this case is advances. You subtract the negative indicator, which is declines, and you divide that difference by the total number of issues to get the AD percent, advance decline percent. So you have net advances divided by total issues, which gives you the AD percent indicator. So here's an example. You can see if you have 250 advancers and 250 decliners, that cancels out to 0. So you have 0 divided by 500, which is 0%. Now, if you have 425 advancers and 75 decliners, then you get a net of plus 350. And you divide that plus 350 by 500 to get plus 70%. And that shows strong upside participation. On the downside, if you have 75 advancers and then 425 decliners, then you have a net of minus 350, and you divide that by 500 to get minus 70%, and that shows strong downside participation. We can also apply this same principle to advance decline volume percent. So it would be advancing volume less declining volume divided by total volume. So if an index has 400 million shares of advancing volume and 400 million shares of declining volume, well, they cancel each other out. So you basically have 0. If you have 700 million shares of advancing volume and 100 million shares of declining volume, you get a plus 600 million of advancing, and that would be plus 75% for AD volume percent. That would show strong buying pressure because there was lots of volume on the upside. On the downside, if you had 100 million shares advancing volume and 700 million shares declining volume, you would have a net of minus 600 million. That would give you minus 75% for AD volume percent, and that would show strong selling pressure. Next up, we have high-low percent, and it is calculated in a similar fashion. 52-week highs less 52-week lows divided by total issues. So if you have 60 new highs and 10 new lows, that's a net of plus 50 net new highs. And you would divide that by the total number of issues to get plus 10%. And that's a pretty good day for high-low percent. On the flip side, if you have 10 new highs and 60 new lows, you get minus 50 for net new highs, and high-low percent becomes minus 10%. And that shows a lot of stocks hitting 52-week lows or in downtrends. All right, now we're going to take those 3 base indicators that I just showed you and show you how to create oscillators, cumulative lines, and other breadth indicators. In addition, we're also going to show you how to interpret these and offer some charting tips. So here we have a base indicator, S&P 500 AD percent. You can see the symbol up there at the top, and it's real easy to get the other symbols. Instead of $SPX, you would change to $SML for small caps because the symbols end in ADP. For the technology SPDR, you'd simply substitute out for XLK. Now you can see that this raw indicator is very choppy. It's all over the place because day to day the fluctuations are quite large. There you can see these 0 lines, so we're fluctuating above and below 0. So we can't really do anything with this. We need to change the format of it in order to make some sense of this indicator. So if I scroll down to the chart attributes section, I can make those changes. So you can see we have a solid line right now, and I'm going to go ahead and change that to a histogram. And in the overlays section, I'm going to add a horizontal line. And I'm going to put 3 parameters in there because I want 3 different horizontal lines. I want one at plus 70, I want one at 0, and I want one at minus 70 because those were the levels that I think are important to watch. And I'll click update and we'll get a new chart that we can actually do something with. So here is our new chart in histogram format for AD percent. Now here's a format we can do something with. You can see the 70% line there at the top and the minus 70% line at the bottom. And you can clearly see when we move above plus 70%, which shows strong upside participation, and when we move below minus 70%, which shows strong downside participation. And you can see this period here, we haven't had any strong downside participation for months, whereas we've had a number of days with strong upside participation. So that would favor the bulls. Now the next way we can massage the data here for AD% is by adding a moving average. Now the length of that moving average is up to you. I like to use a shorter moving average to look for a breadth thrust, say a 10-period moving average. And also whether you use EMA or SMA is entirely up to you as well. I prefer an exponential moving average because that puts more weight on recent prices. But again, totally up to you. Chart them both, compare them, see what you like. So if we go down to the parameters window, we can easily add a moving average as an overlay there. So I'm going to choose exponential moving average. I'm going to change that to 10, and I want to color it red. And then when I click update, you're going to see I'm going to get a 10-period moving average. But you're going to say, wait, you know, this chart's all messy. How can I analyze this? I can barely see the moving average with those bars there. Well, we have to make those bars invisible, and then the moving average is going to expand, and it's going to be the dominant indicator on that chart. So if we go down to the chart attributes section, and instead of histogram, we choose to make this invisible, and you click update, you're going to see that we have a completely different looking chart. Now all we have is the 10-period EMA of 80%. And you can see that the horizontal lines at 70 and minus 70 don't really fit there, so we do have to change those. I tend to like 30 and minus 30 instead, so I can change those as well. And I can even change the color. If I want blue, because the exponential moving average is in red, so I want a little contrast. And there we can see we have now an oscillator of 80% for the S&P 500. You can see when we had some strong downside participation there into February when we moved below minus 30% twice. Again, in March, we moved below minus 30%. And then we had a few bouts of strong upside participation, but didn't quite get to that plus 30% threshold. And I'll have more on the importance of that threshold and show you some crosses a little later on. Now we're going to create the AD line. So what I've done is I've got a bigger chart. It's going back a year and a half. I've got 80%, which is the base indicator we're using to create all these indicators, the oscillator just before, and now the AD line. So what I'm going to do is I'm going to go down to the chart attributes section again. And from type, I'm going to change that from histogram to cumulative. And then I'm going to click update. And you can see, voila, we're going to get an AD line. So how do we use the AD line? Well, basically, we're looking for new highs in the AD line to be confirmed with new highs in the S&P 500. We're not looking for a divergence, say, in the AD line. So I'm going to click on the Inspect button up there at the top, and we'll do a little analysis on this chart. When I click the Inspect button, I'm going to get a little refresh, and then I'm going to get some crosshairs that I can use to compare highs with highs, lows with lows by using the vertical line. So you can see here we've got the high from August 7, 2017, and we got a high in the AD line, and we've got a high in the index. And then in January, we had a high in the index and a high in the AD line. We didn't have a divergence in the AD line. We can see the AD line continued higher here into February, March, and April, and the index was under pressure. So what does that tell me? Well, that tells me that large caps, which dominate the S&P 500, were struggling or weighing on the index, but the average stock, which is reflected with the AD line, was still doing okay because it was still advancing. And then you can see large caps The index started advancing in April, May, June, and July with higher highs and higher lows, and the AD line kept pace. So we don't have a divergence in the AD line, and I wouldn't be concerned until, say, the index makes a new high and the AD line fails to confirm it. And that should occur over a couple of months. It shouldn't occur, say, over 1 week. That would be a short-term divergence. But if you get like a lower high in the AD line over a 1 to 2 month period with a higher high in the S&P 500, that would be cause for concern. But right here on this chart, no cause for concern. We can also add moving averages to the AD line and to the S&P 500 in the indicator window there, and then compare how the AD line is acting relative to its moving averages and the S&P 500 is acting relative to its moving averages. So when I scroll down, the first thing I'm going to do in the chart attributes section is I'm going to change the up and down colors to both black. So that way my AD line is just going to be one black line. All right, then for overlays, I'm going to add two simple moving averages. I'm going to add a 50-day simple moving average and a 200-day simple moving average. We'll keep it simple. And then for the S&P 500, I'll click Advanced Options. And for overlay, I'm going to add a simple moving average. Now, to add a second moving average, I'm going to have to duplicate the S&P 500 because we can't just add comma 200 here to get two moving averages. So if I go price and then I add another S&P 500, and instead I'm going to position it behind the other indicator window, behind the S&P 500. And I'll go ahead and leave this at 1, and I'll add my overlay of the simple moving average, and I'll use 200. And I'll go ahead and do that one red, and I'll put the 50-day moving average in green. It's real easy to change the colors there. If I click Update, my chart will refresh, and now I can see the AD line with the 50-day moving average and 200-day moving average, and the S&P 500 with both moving averages, and I can compare how both are reacting to these moving averages. So if the AD line crosses below its 200-day moving average, that would obviously be a long-term warning for the market. Now, to create these indicators using AD volume percent and high-low percent is pretty much the same way. Here, I've just substituted the symbol here. You can see that I've got $SPX UDP, which is S&P 500 volume advanced decline percent, and I've got my horizontal lines at plus 70 and minus 70 and 0 in the middle, so we can see strong volume days on the upside and then strong volume days on the downside. The AD volume line is created just like the AD line. Instead of $SPX ADP, I'm using $SPX UDP again. And there you can see the AD volume line in the top window and the S&P 500 in the lower window. And just to confirm those settings, you would use Cumulative to create the AD volume line there. The high-low percent indicator I'm showing as a histogram here, and look how easy it is to change these symbols. Instead of ADP or UDP, I use HLP now. So if I want small cap high-low percent, I do $SML HLP. Here I've got the S&P 500 high-low percent. So I've got a histogram, and I can see when high-low percent is moving above 10%, which I consider an important upside threshold, and if it moves below minus 10%, which we have yet to see here in 2018. This is the high-low line, and it's of course created using the cumulative indicator applied to S&P 500 high-low percent here. I've added a 10-day EMA because this is a pretty smooth line that doesn't change direction very fast. You can see here it crossed below the 10-day EMA, and here it crossed above the 10-day EMA. Now, I've got a little trick using the PPO to identify these crosses a little easier. Now, first and foremost, note that I'm using high-low percent in the main indicator window. So that means I can easily apply the PPO as just an indicator to that cumulative line there. So if I go down to the indicator box and I choose PPO for the percentage price oscillator, I'm going to change those settings to 1, 10, and 0. So that's going to show me when the 1 period moving average crosses below the 10 period moving average, which is what we're seeing on that cumulative price chart. And it's going to show it as a histogram to make it a lot easier to see. So if I refresh that chart and then we look at this histogram, we can see, well, yeah, it's kind of scrunched up. I would like to see it a little bigger. So if we go down, we're going to change the height of that window to 1. So all 3 of those windows are going to be equal. And I'm going to go ahead and add a date time axis between the S&P 500 and the PPO. And if I click update, I'll get a refresh and a different looking chart. So now I can see when the 1 period EMA, which is the high-low line, goes below the 10 period EMA, we get the PPO turning negative here. And the same thing happened there in early May. And right now it's positive, so I wouldn't become concerned with the high-low line unless that PPO turns negative, or as you see up top, it moves below the 10-day EMA. Charting multiple indicators, and this is where you can put 80% and other indicators for different indexes all on one chart, even different sectors. Now, before we do that, I just want to mention I'm using the S&P 1500 basically to represent the broader market. And in these examples, I'm going to chart the breadth indicators for the S&P 500, S&P Mid-Cap 400, and S&P Small-Cap 600. And obviously, this represents the 3 main food groups, the 3 main stock groups in the market. All sectors are represented in these 3. You get stocks from the NYSE and the NASDAQ. And these indicators are available at StockCharts, and so we should take advantage of it. So this first chart here shows the S&P 500 in the top window this time, and now I've put the breadth indicators just below. We have the S&P 500 80% indicator, we have the S&P Mid-Cap 400 80% indicator, and the S&P Small-Cap 80% indicator. And here we can easily see which ones are leading. For instance, we can see small caps moved above 70% here in early July, as did large caps, but mid caps fell just short. Now, if you scroll down, you can see how I created this chart. It's very simple. I just had an indicator price and used a symbol. I put a separation there with the date time axis and then added another indicator. Now, there's one thing I would recommend you do on these charts, and that is check the y-axis labels box. And if you do that, then you'll see the values for these indicators on the right-hand side. So now you can see we have 9.4 for large cap 80%, 19.75 for mid cap 80%, and the strongest was small cap 80% at 26.83%. That would be represented by that last bar there. This chart here shows the S&P 500 in the top window, and then I've got the 10-day EMA of 80% for the S&P 500, S&P Mid-Cap 400, and S&P Small-Cap 600 for the indicator windows. And I use these to measure the breadth thrust. Now, at the beginning, I talked about how I think the levels of plus 30%, which I've done in green, minus 30%, which I've done in red, are important. And I did 0 in gray, and I'll show you how to do that in just a minute. So you can see here in February, we had a couple of pushes below minus 30% in large caps and mid caps, and we haven't been above plus 30% since then. So that's a bit of a concern. We can see small caps pushed below minus 30% there and then hit that plus 30% level in May. So small caps are rebounding stronger than large caps and mid caps as far as this indicator is concerned. Now, if we scroll down and we look at the settings, this chart's a bit different. You can see I've had to add the indicators twice, and that was to get the exponential moving average in the first window here. So there's SPX ADP, and it's invisible, and the 10-day EMA to make that setting. And then I added another one behind the price there. It's also invisible, and I've added the horizontal line. And you can see I've got minus 30 colon red, and then I've got 0 colon gray, a comma, and 30 colon green to get the colors of those lines just the way I like them. Now we build and group these indicators so we can study the past, to learn from the past, to see what signals we might look for in the future. And the way we study the past is by changing the range. And we have a really neat slider that you can use. You can see I've got a 1-year chart here now, but if I change this to select start and end date, I get a slider. And I'm going to scroll up just a little bit there. And you can see I'm going to move that slider, and this is going to shift the chart so I can see what was happening in the past. Now you may have noticed that one of these annotations disappeared, and I'll show you the reason that happened. If I go back, you're going to see that annotation reappears, and that's because it is not pinned. So if I click annotate and I scroll down, I'm going to select this annotation here, and you can see the pin is shaded, which means it is selected. And if I select the lower annotation for small caps, you can see it's not selected. So I'm going to click that to select it and pin it so it stays there when I move the slider. I'll click yes to save those settings. And so now when I move the slider, you can see that the annotations stay. I'd like to scroll this slider to the period from 2015 to 2016, and there we can see some signals when participation expanded on the upside and also on the downside. We had some pretty strong moves during that period, so you can see how it works here. Now, no indicator is perfect, and we will get our whipsaws, but the idea behind this indicator is when 2 of the 3 major indexes have a downward breadth thrust, that's bearish. When 2 of the 3 have an upward breadth thrust, that's bullish. And you can see in August 2015, all 3 moved down below minus 30%. So basically, we had some serious downside participation among throughout the 3 indexes, and that was a bearish indication. We had 2 of the 3 moving above 30% in October, and that gave way to some strength in the market. But that was, of course, countered when all 3 moved below minus 30% in January 2016. This was an unusually volatile period. But then we had more breadth thrust in March when 2 of the 3 moved above 30%. That was a positive. That showed a lot of upside participation. The S&P 500 fell a little bit short, hitting 29.3, but that led to a pretty nice bounce. And then right there at the end of June, you can see, and early July, we had all 3 moving above plus 30%. And that's a breadth thrust like a rocket lifting off. And that's what we want to see to signal the start of an extended rally, or on the downside, below minus 30% of a possible extended decline. This chart here shows high-low percent for the S&P 500, S&P Mid-Cap 400, and S&P Small-Cap 600. I've got my horizontal lines at plus 10% and minus 10% for signals. And you can see we got a bearish signal from mid-caps in February, but it wasn't confirmed by large caps or small caps. And for the most part, we've been above 10% in May and June. Now I want to go back and look at the period again from 2015, 2016. So I'm just going to move that slider over to that date period so we can analyze it. Now if you look here, you can see that we got some bearish signals there in August 2015 from large caps, mid caps, and small caps, all 3. And then we got a bullish signal from large caps in October, but it wasn't confirmed by mid caps or by small caps. And then we got more bearish signals in January and February, so the bear was still in force. In fact, from August until February, the bear was clearly in force. And then we started getting bullish signals in March with large caps triggering a high-low percent signal with a move above plus 10%, mid caps confirming there, and then small caps finally confirmed in June. And you see we had all 3 confirming there in June. So the bull market was back there in June. Now, if we forward a little bit to this 2016-2017 period, we can see some more signals and how they worked. You can see here just before the election, we were starting to turn negative for high-low percent. But then right after the election, we had this big surge in new highs in November and December. And that was a huge buying thrust that signaled the start of an up leg. And that up leg pretty much lasted until January 2018. So if you're looking for a signal from HighLow Percent, look for two of these three indicators to go below minus 10% to reverse the current bull market stance that we're on. Now, as I said, we do have these indicators available for the 9-sector SPDRs, and what I've done on this chart is I've created a chart with S&P HighLow Percent there at the top, and then below I've got the HighLow Percent indicators for the 9 sectors, and I sorted it by the highest value. So you can see technology here as the highest value, 17.33% for HighLow Percent. So that tells me most of the new highs, at least for this particular day, came from the technology sector. And I've got a horizontal line at plus 10%. You can't see the one at minus 10%, but you can see technology is regularly above plus 10%. It's one of the leading sectors as far as HighLow Percent. And then you can see healthcare there at 11.11%. We've got industrials, not much going on there over the last few months. Same with materials, not much going on. And finance, not much going on either. That red arrow shows when HighLow Percent moved below minus 10%. And then we have consumer staples and so on. Now, as far as the settings are concerned, you can see you have to add a lot of symbols to create this chart. And so that's going to depend on the level of your subscription membership to StockCharts. You're going to need to have a pro level subscription to get this many symbols on one chart. I think the extra members can have up to 6 symbols on one chart. And before we show you where to find the breath symbols, just a note that if you have any questions, comments, or feedback, you can always send an email to askarthur@stockcharts.com. I cannot answer all of them, but I do promise to read it and consider it. So next up, we're going to show you where you can find all these symbols for these great breath indicators. Now, to find these breath symbols, you can do a simple search here at StockCharts. I'm on the free tools page you can see up there at the top. And this is always a great place to start because here's where you can find all of our charting tools. And in the right-hand corner, you see the little magnifying glass icon, and that is the search icon. So you can click on that icon to open up the search box, and I'm just going to type in advance and decline and percent. And by using the and there, I'm making sure that all 3 terms are going to be included in my results. And you can see you're going to get a page that shows frequently asked questions, and it's not being found. But what you do is you have to click here, support articles, and change to symbols. And once we search for symbols, voila, there you're going to see all the symbols that have advance and decline and percent. And we have all of those breath indicators available for you. Now we can refine this search even further by going to the search box, and instead of clicking advanced decline and percent, we'll just clear that out and we will try advanced decline and volume percent. And there it is. And if we search for that, we're going to get all the AD volume percent indicators that we have at StockCharts. And we can do one more search here by going to that search box, and you know what I'm going to search for. I'm going to search for high and low and percent. And again, there are all the indicators available. And you can see the first data point on the right-hand side. And if you want to create a chart immediately, you can click these symbols on the left-hand side. So there's 2 more groups of breath indicators I'll just show you real quick. If you go to the search box and you search for the term McClellan, you're going to see all of our McClellan indicators, the oscillator and the summation index. And we also have a number of breath indicators from Greg Morse, and they begin with exclamation point BI. And if you search for that term, you're going to see all of Greg's breath indicators from his book, The Encyclopedia of Breath Indicators. And that concludes this special edition of On Trend covering breath indicators. Thanks very much for tuning in, and remember to stay on the right side of the trend.
This video will show you how to add a date line to your charts. So if you have a whole bunch of stuff piled up here and you want a date line farther down, there is a way to put it on there and how to move it. So down here under indicators, it's one of the options, date time axis, and by just moving it up and down with these triangle arrows, and notice this little blue arrow that moves with it, it'll help you position it exactly where you want it.